All right, everybody, welcome back. So, trade review today. Before I get into the trades, remember that the morning briefing today, we talked about the idea that we anticipated a range-bound day because everybody was going to be waiting on Powell. Powell was going to be testifying in the House, and that it would very likely just be kind of violent, but range-bound and not a whole lot of movement. That lowers our expectations for trading opportunities on the idea that if we're still within the range, there's really not going to be a whole lot of opportunities. One thing that I always talk about when it comes to ranges is the Globex range, or the idea that we can't have a trend day if we are inside of one, the Globex range, and then two, yesterday's range. So once you leave that, then you can have the opportunity for a trend day. Otherwise, if you're still inside the Globex and you're still inside the previous day's range, you don't really have a trend, right? If your current candle is inside the previous candle, you're not trending. With all of that said, let's go ahead and start focusing on the trades that came about today. We're still looking at the Globex. I haven't rolled forward yet to see what the trading day looked like, but I want to kind of walk you through some of the steps that I do when I'm preparing for the trading day. So one, I think about that range. What do we have going into the open today? The RTH open. Well, we had the Globex high, so we can mark that and we can shoot it forward, right? So let's get that marked and we'll send it off to the right. What else do we got? We have the Globex low. So we can bring that down. What else do we have? Now we have yesterday's low, but it was so close to the Globex low that there's really no reason to mark them twice. So I'm just going to bring that line back. Now we've got both of those. If yesterday's Globex low was lower than the RTH low, we would mark that, but it's not, it's higher. So we could mark the Globex low if we were to expand beyond this Globex, but unless we do, there's no reason to mark it. Another thing that we could mark before we get into today's trading session would be where the market opened yesterday, the RTH open. So with all of those in mind, that's pretty much what we started the day with. And that was the idea that we really wanted to focus on. If we're still inside of this range, then it's very likely going to be choppy, violent, hard to trade, and not a lot of opportunities. It doesn't mean that we can't trade it, just that we have to kind of lower our expectations. Also, price aggregates. One of the things that means is when we get to a pivot point, liquidity resides on the other side of the pivot. That means when we do get to the edge, we expect to go through the edge more often than not and then come back in. We see this happen all the time. So here was a low. When we came back to that low, we expanded beyond it because liquidity resides on the other side of the pivot. Same thing again. If we were to shoot that line across, the next time price came down to that level, it overshot it. Why? Because liquidity resides on the other side of the pivot. Same thing up here. We had a high set, we pulled back. When we came back to it, we overshot it completely. So when we go into the trading day, if we come up to this white line in the trading day, we're going to have an expectation that we will shoot through it. But that does not mean we think we're going back up. And if we come down to the low, we have to have an expectation that we would go through it. But that does not mean that we're breaking down in the market and that we're going to go to new lows. It limits our expectations, right? It dials us back and makes us realize that the big expansion day of yesterday very likely won't be the same kind of expansion day that we get today. We're going to try to maintain this bias that we're really not going anywhere until proven otherwise. Now, is there anything else that we could mark before we get into today's trading? Yeah, we could mark the Globex open. And then we could focus on all of this price action because we can see how price responded to that level. And we could mark out this because price responded to that level. So we'll go ahead and add those as well. Remember, these pivot points, they're just places where price has reacted before. These are not trade opportunities. They're just places where we anticipate there could be a reaction out of the market. Now, one thing that might help you when you start getting a lot of lines like this is to color code them, change their shape to a dotted line, big dashes, little dashes, different line thicknesses, anything that can help you distinguish what it is that you're looking at. So I changed yesterday's low and the Globex low to a thin yellow. The Globex high, I'm also going to change it to a thin yellow. That way we can kind of distinguish between what we have and as a Globex high, a Globex low, yesterday's low. Those are what we call institutional pivot points. So now we've distinguished those from the rest of these. We could also, since the open is an institutional pivot point, we can change that one as well. So now the yellow ones are institutional or universal, and the white ones are just a more common, regular, run-of-the-mill, everyday kind of pivot point. All right, so we've got those marked out. The expectation is that if price comes up into those levels, it is a place where it could reverse, but not a place where we expect it to reverse, and that liquidity could reside on the other side of it, especially for an example with these two wicks where they failed to get back up into this zone. And this wick, because we have not been back up there since we set it, we haven't even come close to it. So when we come in that area, we have to be concerned first with front running, that there could be liquidity right there. And then if it's not front run, that there could be liquidity on the other side. All right. So we got into the open and immediately we had that big shooting candle to the upside. I'll kind of zoom in here a little bit. That first 5 minutes, just a big rally candle. It didn't get anywhere, came right back down, and we actually closed just a little bit lower than where we opened. Next candle, we still don't have anything. And why am I going through this candle by candle? Well, we're looking for that opportunity. We're looking for anything that says we got to trade. We don't diddle in the middle. So from the open, we're in the middle. There's just nothing here. We're right at VWAP. With all of the lines that I have drawn, there's no opportunity yet. Price has to get to the edge for there to be an opportunity. If we get to the edge and break out, there's a trade. If we get to the edge and break down, there's a trade. But we can't trade from the middle to the edge because we don't know which way price wants to go yet. So one of our pivot points was hit. See a 2-bar reversal, still no trade. I want to pause here for a moment. Look at all these wicks. Look at all that liquidity right there at VWAP. So price is coming up to VWAP and there's a trade program sitting right there, selling into it every time price got to VWAP. And then we got through it with this candle right here. That can mean one of two things. Either we wiped out all of the liquidity that is there and we've made it through, or that a big trade came in and took that liquidity out and we made it through. The third thing that it could be is the seller decided, hey, you guys want to buy it up? You can buy it from me up here rather than buying it from me down here. Right? So buyer, seller, take what you can get. If this seller moves everything they got and sets it up here, then that's where it's getting sold from. And that's where buyers are picking it up. All right, now In this candle right here, lots of violence. It's a real big candle. Notice the time. It's 10 o'clock on the dot, and there's no trade here. Now, just like yesterday at 10 o'clock, big sweeping move right at 10 o'clock. Now, Powell was scheduled to speak yesterday at 10, and he did and dropped the market. He was scheduled to speak today at 10. He did, and it dropped the market, but in a different way. We came right back up again from that drop. You're not always going to see a big move at 10 o'clock, but watch the clock. 10 o'clock, 10:30, 11, 11:30. It's very often where big moves come from. So if you were primed for this trade, you could have tried to take a long off of the low. I don't like it. I'm just pointing it out. I wouldn't deem it a good trade because in the heat of the moment, when that candle was live, it was violent, it was fast, it dropped down there, there was no warning, and it came right back out of it again. You would not have known that that was a good trade. Same thing with all of these big, massive, violent candles spanning the entire distance of the range that we have marked in one single candle. That is not a tradable opportunity. I'm going to let those go. We're looking for a trade. Now, just stop right there. It's 10:30 in the morning. On the S&P, we very rarely break out after 10 o'clock unless it's news-based breakout. So when we come up here at 10:30 and we're testing a breakout, we already have an expectation of failure because the breakout didn't happen by 10 a.m. It actually happened later in the morning near 10:30. 10:30 is watch the clock time. We get violence on half hours and on the hour. This could be nothing more than liquidity, but we have every expectation of failure. There is our first opportunity. So where's the trade come in? Well, if we're watching price running up to this level, we're looking at the clock and we realize, yeah, it's like 10:30. No way this is an expansion trade. There's no news to it. It's the Globex high. The phrase that I like to use is, I don't know if it's going to reverse here. But if it was going to reverse today, this is where it would happen. We failed to continue the breakout. We came back in and we closed inside of that blue candle. Now, one thing everybody asks is, well, I don't know when to get in. I think really what people are saying is, I've tried to get in at different places and I have to take heat or I end up getting stopped out and it's not working for me. Give me a better idea. There really is no best way to do this. When do you get in? When the blue candle closes? When the red one opens? When the red one closes? Where does the stop go? Obviously, getting in at the high, anywhere near that high, would be an LRE. It's a low risk entry. So at any point during the life of that red candle, if you had tried to get in, you could put your stop above that red candle. But if you're getting in way down here, that's a real big stop. If you get in when the candle is alive, then you didn't wait for the candle to close. So it's nearly a catch-22. Like, how are we supposed to do it? There is no perfect answer to this. But a few things to keep in mind. If you are looking to trade price action, the candle has to close for your signal to be valid. If you get in and the candle isn't closed, then you traded a signal that wasn't valid. Right? So it kind of follows a set of rules. If you're going to trade price action and you're analyzing price and price is giving you the trigger and the signal and the trigger isn't valid until the candle closes, which means if you get in before that, you're getting in without a valid signal. So that candle closes, the new one opens. That's a really great place to get in, right when that candle opens. So where does our stop go? Well, I talked about how the high of that candle is it's just too much. It's too far away. So one thing we can do is we can measure all of this candle and we can try to focus on 50% of that. If it gets above 50% of that candle, we can consider that we might be wrong. And remember, a stop isn't designed to tell you that the trade is right or wrong. It's just designed to help you limit your losses. If I was to get in here, manually run my stop, thinking about how far do I really think this trade could go, I'm going to be a little conservative and say the entry is 39.98. Well, if I can get down to 39.93, that's a nice 5-point trade. How much am I physically willing to risk for a 5-point trade? 1-to-1 is fair, but here's the deal. A 1-to-1 trade in the futures really isn't 1-to-1. So if I risk 5 to make 5, if I'm right and I pay commissions, I really only get 4. If I'm wrong and I pay commissions, I really lost 6. So a 5-to-5 or a 1-to-1 risk to reward is really risking 6 to make 4. Something to keep in mind. Next is, how am I going to get in? All at once, or maybe fade the play, get in multiple places. So if I took my first entry right when the candle opened and we started to run up a little bit and then it started going down, I might take my second entry either slightly above the first or slightly below the first. And then I got to think about, where am I getting out? Now, one thing that I've done, especially on the ES, just because of how big it is as soon as my current candle closes, I close one of my contracts. So if we did that, that would have been one place to get some of the risk out right there. And sure, I mean, if I keep scrolling this, you'll see I would have left some money behind. I could have gotten out at like 86 for the lowest of that, but we don't know what's coming, right? One thing I do know is that candle closed moving in the right direction. And if I had took some of my profit right there and I held the rest of my contracts, this next candle offered me a lot of opportunity. Then we stall, right? We had a rally base drop into a base. So if we only look at drop base, the next part is rally or base. And what we ended up with is rally. So it was drop base rally. That would have killed the trade that I was in. Now we need a new opportunity. We're crisscrossing through VWAP. We are still within that Globex range. There is no expansion in the morning session. Heck, we're already all the way to lunch at this point. So here we came really close to that yellow line. The problem is it was front run. So if we were waiting down on the yellow line looking for an opportunity, we never got it because they front run this one. It never hit the pivot. It ran away without us. Those are really hard to anticipate. You have to kind of get it on the go. Otherwise, this candle close and this open is your opportunity to get in. And that's a real difficult choice because we're still in the middle, right? We don't know at this point what is it going to do, right? This could just be a pullback before continuing lower. So while that could be considered a trade, I wouldn't have traded it. I would have missed that one. Now here, run up into a solid top. This is now a double top. And although we don't know what's going to happen in the next candle, we didn't expand beyond this. So a good double top would have gone higher than the previous one, and it didn't. This is an opportunity. The risk is all of these wicks. These wicks would have been really hard to trade without getting stopped out. Looking back is easy. Live, when this thing was bouncing up and down all over the place, it would have been really hard to trade that. It's just violent, wicking around, staying inside the previous candle. So you almost have to take this trade on faith. There is no good signal to take that trade. The only thing you've got is an LRE, low risk entry. That the closer you can get into the top, the better, on the idea that if you're wrong, price is going to come up and take you out, but the loss will be small. It is the lowest risk you could take. Unfortunately, there's no good signal that goes with it. You just have to take it on faith. That trade had a follow through all the way down to the bottom with a really good overshoot and a nice reversal. As a really good trade opportunity. Again, hard to trade. Just physically hard to trust this. But recognize that this is the low that we're focused on. It shot through it, came right back up, and closed above it. Again, a low risk entry. Getting in on this low with nearly nothing else but faith. Now, at some point, I'm going to bring in the order book, the dome, trade imbalance, watching the tape speed. There's so much more that we can do to confirm these levels, but that is so far beyond the scope of this video right now. I got to get you guys to the point where you're at least recognizing opportunities to trade. Clear, obvious trading opportunities. When we were sitting at this point, we had a high set on the day. When price started moving in that direction, a lot of people tell me, well, I was trying to trade it back to the top. I'm not going to tell you you're wrong, but I will tell you that's not the trade I would take. What I do when I see price making a run like this, I don't try to jump in it and take the run. I think about where it's going and where I can attack it from an ambush, jump in on it at a predetermined location that I choose, not just responding to price as it's getting out of control, running away from me. This is one of the best trades of the day right there. This one was good because it was Globex high. And it was 1030. And it was a reaction to this violent move. So I like this one. But this one was better. Third time's the charm. That would have been the play of the day. This one would have been hard, but it was decent. It's tradable. I don't really like it, but it would do. And I called this one in the trade room. Double bottom. We're looking for that reversal. What I didn't like about it is how long it took to finally reverse, but it did have a nice TRB with it. And so there's the play. Still the best one of the day. That one right there, 100%. And remember, this was a trash day anyways. This is a day where we already knew in advance that it was going to be violent, boring, choppy, with a lot of flips and a lot of wicks and just a lot of danger. And if this doesn't look like a lot of danger, it's because the market's closed now and we're looking back. Looking back is really easy because none of this stuff is moving anymore. During the day, this was a hard day to trade. Even this high, we didn't have an evening star reversal. We didn't have a gap and drop. All we had was faith that it was a triple top fail, and that's it. And a lot of really good trades come from that. But that doesn't mean we got to like it. This one near the end of the day, right on the dot, flip and run, good trend line breakover, lots of violence, lots of flow. I don't like it. It's too late in the day. The size of this move down, and then the size of this move back up. And then again, the size of them moving down and then really skinny straight line shot, what they call one-time framing. So there wouldn't have been any expectation of that kind of move. It just happened. It unfolded really fast. It shot through all of the pivots really quick. It never slowed down. It was a bad trade. Now, was it tradable? Yes. If you don't mind trading at 3:30 in the afternoon, this trend line breakover is 100% okay to do. It just doesn't suit me, right? And that's all it is. It just doesn't suit me. But a really nice trend line breakover and a run back up to the top of the zone. The same zone that we focused on through this whole video. Now that I am zoomed out a little bit, hopefully you can see just how absolutely nasty this day was today. So while it was considered, an opportunity to trade, these aren't good opportunities. On a day like this, knowing in advance that it's very likely going to be trash and a sideways day, this is a day for options. This is a day for butterflies and iron condors and credit spreads, above the market and below the market, not trying to trade futures with direction. But that was the best one right there. That's what I got for you guys. I hope this helps. I'll see y'all tomorrow.